Hey everyone, this is Kirk here again at OptionAlpha.com, and welcome back to the video recap that we do here each and every night on the membership side of our blog. And I wanted to actually just take a couple seconds before we actually go over tonight's video, because we have a couple trades that we want to go over, an opening order and two closing orders. But I thought this was just really interesting, and as a lot of people know, I'm super open about everything about the website and performance and stats and everything that goes along with the growth of Option Alpha, which is really my baby. I love the site, I love the community that we've developed here, and it's all because of you guys. And I think it's really cool that when I started doing these daily videos that we're doing right now, that we actually saw just a massive increase in the people that like these videos. So again, if you like these videos that we're doing, please let us know what we can do better with these videos, what you'd like to see more of, what you don't like to see more of. Talk about the length and how we look at things. These obviously have been a real big hit. And I'm actually in my YouTube account just showing you guys some stats, but you'll see that really since we started doing these videos back kind of at the end of last year, kind of at the tail end of last year, and really in January, we started kicking off a lot of these videos. You'll notice that the growth in our views on YouTube, just kind of showing the stats of these videos, has gone up anywhere between 150 and 300% over the last kind of 4 months here. So it's really just a testament to just making a different change in how we do things, taking a lot of the feedback that you guys gave us at the end of last year and really tweaking how we do things here at Option Alpha. So we're going to continue to make a ton of changes, do things a lot better as always, and just continue to work towards helping everyone educate them on options trading and how to trade better. I know they've been super helpful for a lot of people. So again, if you love these videos, continue to check these things out, share them, favorite them, like them, whatever it is. But just give us your honest feedback. That's all we ask for in return. All right, so tonight's video, we're going to go over some of the opening and closing trades that we made here today on the end of April. So we're done with April, on to May tomorrow, and really going to kick off kind of the sell in May or go away type fears that a lot of people had. And sometimes it happens, sometimes it doesn't happen. Whatever the case is, we're still going to be positioned fairly neutral in the market going forward. Now, we actually had one opening order and two closing orders. I want to start with the closing orders tonight because they're actually fairly simple closeouts. The first one is in POT, and this is one that we had a 34-35 call spread. We actually haven't been in this one very long and sold it today for a 130 credit. So we had originally bought it right around mid-price or right around $1, and today we closed it out for a 130 credit or a $33 profit on each vertical. So it was about a $100 trade, and again, it was just a very easy, very simple trade, not a lot of risk, but at this point, we've made about 30% of our max potential gain, so we didn't feel like holding this thing all the way to expiration is really worth it in June when we've made 30% here very quickly. So we went ahead and closed out that trade and just moved on. Now you can see when we go to the chart of POT that the stock has just continued to move up since we actually bought the spread. So again, it's past our first strike, past our second strike now, and it's moving really nicely higher. But again, at this point, we don't know if it's going to get overextended and fall back. There's a lot of time between now and expiration, which is very far out. It's about 50 days out. So we don't want this thing to turn around. And what originally was a 50-50 bet on directional, we now have a profit. We see a profit, so we got to take that profit off the table and move on to the next trade. The next one that we closed out is Baidu. Baidu's been a little bit tricky, and I'm so glad that we closed out this trade in the early morning. So this is one of the first ones that we actually closed out of, and we bought this spread back for a 49-cent debit. Now, these are May options, so they are coming up on expiration, and we could have held this thing all the way to expiration, but we made a nice $66 profit on each of the verticals that we brought back, so it was a very profitable trade. We had originally sold a call spread against Baidu heading into earnings, and Baidu had earnings which weren't really that good, and the stock dropped, but has since recovered that drop. So you'll see here that the stock dropped after earnings, and that this was the earnings day right here, so it kind of dropped after earnings. And you'll notice that right before earnings, we were kind of on the threshold of being in the money or out of the money. With our first strike at 65, our next strike at 170 here, you see that we're very close to where the stock could then go in the money and start to create a loss. But as implied volatility dropped and as the stock continued to move lower, that obviously made us make money very quickly. And now the spread's down to around 49 cents or so. When we actually closed out this trade earlier in the day, it was around 49 cents, obviously, and has since moved back up with the stock kind of rallying towards the end of the day. So what we don't want to see happen is we don't want to see the market kind of retest this area of future resistance going forward, kind of retest that area before expiration. And if the stock and general market moves up higher, we could get really tested on this and really kind of erode the profit that we already have in this position. So at this point, it's better just to get out of the position completely. The stock did everything we thought it was going to do. It moved lower, implied volatility dropped. I mean, what else do you want to ask for, right? You got to get out of the position and save some money. So the new trade that we entered today is in the Qs. The Qs actually have had pretty steady implied volatility, which is really great to see. So normally a lot of these major markets, the ETFs, the Qs, the IWM, the DIA, the SPY, etc., doesn't really have a lot of implied volatility throughout the whole year. So it doesn't maintain that high implied volatility. But we saw some good implied volatility in the Qs and went ahead and sold the 84.63 and 83.63 credit put spread for a 25-cent credit. Now, don't get confused on the actual strikes. So remember that the Qs went through some adjusting for dividends, etc. So that gives us this different strike price for all the strikes. And I'm going to go in here and show you guys this. But again, don't get really confused on the actual strike prices being these 84.63, etc. What you need to understand is that it's still a dollar wide spread. And you'll notice when we go in there that all of these spreads are still $1 wide, with the exception of some contracts that they've added further out, some kind of round contracts, 85, 80, 75, etc. But they're still a dollar wide, so we still want to take in about 30 cents in credit. So we took in a little bit less, but it's a very major index, so we felt that that was okay. It was very liquid, so pricing was really, really good to get in and out of these. Now on the Qs, you guys will see here on the chart that the stock has actually kind of already made the lows, and what we've talked about before in the past with the major markets is that we saw this pattern going back a couple videos ago of lower lows and lower highs. So the market was continuing to make lower lows, lower highs all the way down, right? And now we've kind of bucked that trend where we've actually made a higher high. So this high right here is higher than the one previously before it. And our low is now higher than the most recent low. So now we're kind of starting to reverse this trend, which is why I'm getting a little bit more bullish and starting to exit some of our bearish positions, adding more bullish positions, just anticipating that at some point the market is going to kind of regain some of the movement that it's lost here in February and March. So if we can, March and April. So with that said, we're starting to add some positions with implied volatility still around 51. When we enter this trade is around 55. Then that's really, really good for us to add as far as credit to our portfolio before the market heads up. So let's actually go to the trading chart so you guys can take a look at this. And you'll see we're already up about $4 on the spread, which is practically minimal. But if we go to June options, which are the 51 strikes or 51 days out, you'll notice that a lot of the strikes, like I said earlier, have this weird pricing. So they're at the 76.63. Everything's at 0.63. And that's just because the dividend really affected everything in these strikes. So they kind of adjusted everything going forward. Now they do have some round number strikes that are still active, like 88s and 89s, etc. So you can still trade those, 75, 76, etc. But at least for what we wanted to do on the put side, you'll notice there's really nothing between 76 and 88 on the put side that has round numbers to make it easier for trading. But look how many contracts are being traded in these strikes. So they're very active. They're very tight bid-ask spreads. And you'll notice that where our pricing is we're at about the 30% probability level, which is where we generally want to be. So we want to be somewhere in the range where we're taking about a 70% chance of success, about a 30% chance of losing money on the trade. That's generally where we like to be on all of our credit spreads or iron condors, naked puts and calls, etc. So that was a really good trade for us. I'm glad we got into it. Very, very active. So feel free, if you have a bigger portfolio, you can kind of scale this up. Don't make too large of a position, but it is a really, really good one to get into because it's so active and so liquid going forward. So as always, I hope you guys really enjoy this video. Thanks so much for checking it out. If you have any comments or questions, add them right below the video. I'll get back to all of those tonight or tomorrow before the open, and happy trading.